Hello, everyone. Welcome to Global Corporate Venturing's Next Wave webinars. Today's webinar is on corporate investments in university spinouts, which we bring to you in partnership with Out the Back Ventures. My name is Kim Moore. I'm the editor of Global University Venturing, a part of Global Corporate Venturing's coverage of university spinouts. So we wanted to delve more into this topic of corporate investments in spinouts, because we are seeing more interest from corporates seeking to invest in early stage startups, including at the research level. And so we're digging deeper into this topic to discuss best practices for corporates to access the innovations that are happening in university labs. We have a wonderful group of panelists from University Technology Transfer, Venture Building, and CVC on the webinar today. Panelists are Kyung Chan, founder and CEO of Out the Back Ventures, a corporate advisory firm specializing in the commercialization of early stage projects with a focus on university IP. We also have Emmanuel Raptakis, Deputy Head of Licensing and Ventures in the Physical Sciences at Oxford University Innovation. Oxford University Innovation is the commercialization arm of the University of Oxford. We also have Lina Arbeles. Lina is the former head of Decarbonisation Ventures, which was the CVC arm of Anglo American. That CVC was disbanded late last year. And we also have Sungsik Bayan, head of EMEA at Samsung Venture Investments. So thank you, panelists, for joining us today. Before we get started, to those listening in, if you'd like to ask a question during the webinar, please do so. You can submit questions in the Q&A function, and we'll try to get them to them as best as we can. So just to start off, I'd like if each panelist could kind of do a brief introduction and tell the audience how you're involved in university spinouts. Kyung, why don't we start with you?
Hi, Kim, and hi, fellow panelists. It's been a real pleasure, actually, planning this and doing this in partnership with GCV. Out the Back Ventures has been really focused on this university spin-out space for 4 years now. It seems like it's gone fast and slow all at the same time. But been a pleasure. I was actually reflecting on it today. Been a pleasure to meet so many people from university, especially in tech transfer, which is often not very well understood. Part of the university ecosystem. So very, very privileged to have, I think at least 50 tech transfer offices in the last 4 years in person, meeting all the people at all various levels and obviously all the researchers. My personal history, I've been an early stage investor for almost 20 years, which is also very hard to believe. So I come from these things with an investor perspective, but I also appreciate the research. And for myself, I love science for some reason. I'm also embarking on a Bachelor of Science in amongst all the fun and excitement of generating spin-outs from universities and national labs. And lastly, my background, because I had a blurred background, but I thought I'd put something else in there. I live in Perth, Western Australia, and this is the local beach. So I thought everyone might appreciate that. Thanks, Kim.
Yeah, thanks, Kyung. And I know it's quite late where you are in Australia, so I appreciate
Doesn't look like
you,
it though, so it looks okay at the moment.
So, Sungsik, would you like to introduce yourself briefly?
Yes, this is Sungsik. I'm currently heading the Europe and Middle East Africa region of Samsung Ventures. Samsung Venture is a heavy investor in the deep tech area, and I think 1/3 of our portfolio is a spin-off company of a university and R&D center. Especially in Europe region, we find out so far for the last 10 years, there are lots of good companies coming out from R&D center and university with a long R&D activity before the spin-off. So this is why we try to heavily engage, and that's why we like today, I would like to share the perspective of my experience. Thank you very much.
Thank you, Lena. Do you want to go next?
Thank you very much. I guess that understanding the dynamics and driving innovation has been a common theme in my career. Actually, the first thing when I did in my career was to do a research and analysis of national innovation systems, which this is looking from a desk how universities, corporates, research institutions interact and do a diagnosis on that. And I did it based on a research that was done in Spain, and then I was replicating it in Latin America. Later on in my career, I had an advisory firm in culture of innovation, and I interacted with multiple CEOs and innovation offices driving innovation into corporates. And more recently, then I went full cycle into doing it myself with as I was the head of decarbonization ventures for Anglo American, we embarked on doing venture building and doing spinouts out of universities globally. So worked from US to UK. So I experienced it myself firsthand. So I'll be talking from my personal experience and not representing any of the employers I worked for in the past.
Well, thank you, Lena. And Emmanuel, would you like to go next?
Thank you, Kim. Thank you for the opportunity to join this excellent panel. I've been with Oxford University Innovation, which is the technology transfer arm of the University of Oxford, for about 3 and a bit years. My personal background is I'm a physicist. I've spent several years in academic research and education, doing a PhD and an MBA and everything in between. Then I had quite a healthy time of my career when I worked with a large corporate, a Japanese company based in Europe. And another quite a significant part of my career working on startups and spinouts, of which I was a founder or a co-founder. So I've been on all 3 sides of the table, basically. So, and I come in with experience and a viewpoint from the corporates, from the spinouts, the small companies, and from the university sector trying to commercialize technology from the research labs.
Well, thank you. Thank you, Emmanuel. I actually want to just sort of start with you, Emmanuel, while we're on the kind of topic. How do you at the University of Oxford, how do you work with corporates to kind of secure investments in spinouts?
We are privileged here in Oxford, obviously, because we have to work with the probably the #1 research university in the world. The output of the university in terms of new ideas, new IP, and new spinouts is one of the highest that you can find around. And we have a very well-resourced system in OUI, in Oxford University Innovation, and at the university, inside the university, in the administration service of the university, to deal with the large variety of touch points with corporates. The OUI, my company, is focusing on the back end of the funnel. So from the point that an IP, intellectual property, is disclosed to us, to the point that we could protect it, and we try to license it to corporates or start a spin-out. I have several colleagues, very highly professional colleagues at the university, who are looking after the front end, which has to do with the collaborations, research collaborations up front. And there's a lot of this activity happening at the university as well. And more often than not, those are linked through the chain of innovation throughout the university.
Right. And have you seen more interest from corporates to invest in the spinouts from the university?
Sure. Yeah, of course. I mean, the corporate, the CVCs, the corporate VCs, they always need to know what's happening at university spinouts, because some of the most exciting opportunities in technology are coming from the university spinouts, and they need to be plugged into what we do. And the TTOs are in a privileged position to have an early warning of important technologies. That's why we're trying to cultivate a relationship with CVCs so that they can know the interesting stuff coming, strategically important stuff coming for their corporations at an early stage. Having said that, traditionally CVCs have been more ready to invest in higher TRL, higher technology readiness level technologies and companies. But that is not a problem with Oxford, because we have hundreds spinouts out there at various stages of fundraising. So CVCs it's very important for them to link, to know what's happening with our Series A, Series B spinouts in our portfolio. At the same time, what I said in my team, we are looking at the seed stage, and this is not extremely active up to now, but we're certainly trying to change that together with our colleagues in the CVC community.
Sanksek, I was wondering if I could sort of ask you from a corporate investor perspective, why do you choose to invest in spinouts instead of, say, kind of later stage startups? What's specific about university spinouts that attracts you as a corporate investor?
Yeah, there's two aspects. So it's first access to the technology. So some of the technology, the corporate is looking for breakthrough actually. For example, when a big change comes in an industry, for example, EUV process, then you need some like technologies that can enable and overcome the challenge of the current like traditional technology. And usually university and R&D center has a long like history of some projects, and this is why we found out from experience actually that the spin-off is not really an early stage, but sometimes it has a long history of R&D and conceptualize, which would be more suitable for like to become the solution of what we were looking for.
Mm-hmm. And just to kind of sort of stay on that topic, when you invest in a spin-out, do you just offer kind of an equity investment, or are you also involved in anything else with the spin-out in terms of like things like venture building?
Oh, you mean about venture building? Yeah, actually for user spin-off, typically they start with really small number of people. That's actually the biggest difference. So they don't have any, so it has to be extremely efficient, and throughout the journey they need lots of new rounds. So this is why we are more trying to help out on the efficiency of the operation. So for example, MVP, it's the most like important concept. So minimal viable product. So you need to really understand the industry standard, which is acceptable to the customer, rather than just building a product that has the best standard, because sometimes you need to be really efficient. And this is actually one of the big part what corporate venture can help out, I think.
And Kyon, you know, you're involved in kind of building ventures from university research. How do you kind of choose universities to work with? I'm just curious, like how you sort of select the university partners.
Oh, that's a great question, and one that my fellow co-director John and I talk about a lot actually. Obviously our biggest resource and most important resource is our time. So where do we allocate our time? It's really interesting. It's not necessarily always the larger universities that we work with. Obviously, we're working with Oxford, and that's been that's an amazing experience. Importantly, really great people, Kim. And I think that, that term is used a lot, the people part, but I can't stress enough when it comes to university spinouts, when you're dealing with, you know, so we get privileged access to the most precious resource at universities, which is their researchers. We have to deal with IP. We have to deal with commercial terms and negotiations, equity stakes, royalties. But when you approach it from the point of view of, and what we do is we approach the universities as true partners in the spinouts. When you view from that perspective, our experience has been that all these negotiations become very people-centric. And what I mean by that, and going back to your question, Kim, is that when we can see and we observe that people are really engaged to help and are wanting to help, and we would like to help, it's not a small point. It actually, you could easily, you know, what could be a year exercise can be compressed into 1 or 2 months. And we know that can happen. So when we're thinking about what the universities we work with, the tech transfer officers, we work with the researchers, the people part, and how we think we can work with people is actually the most important determinant, which is interesting when you think about technology and all these different things, you know, when it forms a spin out, it's that trust factor and the relationships that are so important.
Nina, I was just wondering, when you were Anglo-American, like what was your involvement in investing in university spinouts?
So I guess when we were looking into doing spinouts, it was from 2 perspectives. One, and I guess this could apply also to other type of industries and companies. So one, you could be looking for operational advantage. So is there any technology that you've been looking for out there in the market that you haven't found? Therefore, you need to push the frontiers of innovation, and then you work with the research group in a university, because you want to find a solution for your operations and drive costs down. So that was an example that we worked, for example, with MIT back then, with the aim to find a safer solution and lower cost. So there's a status quo that we want to get better at. There could be other reasons why. It could be more looking into the customer experience. The other example that I have is working, for example, with the University of Birmingham, and we were looking for something that could be of interest for our customers. So that is, again, there are a great variety of startups out there in many topics, but we didn't find enough deal flow. So meaning we didn't identify enough technologies that could provide a solution for potential customers. So to be specific, we were looking for technology to develop green steel. So where there is a handful out there, maybe not enough ones that give us kind of peace of mind that they could reach parity in terms of producing green steel at cost parity. So then that type of spin-out was looking into a technology that could be of interest for our customers.
And when you invested in this particular spin-out from the University of Birmingham, did you just kind of give an equity investment, or did you get involved in on the venture building side?
So for us, and so going back to my previous experiences, I guess when you think of venture building, to me, building a venture is a very nice way to try to bridge the gap between the corporate and the university. I think the corporate speaks a language, the university a very different one at different speeds. And I think building a startup can help bridge that. So we went the venture building route. Having said that, building a venture is not easy. It's a full-time job. So I was the head of the CVC team. So a CVC, by definition, does investments in already existing startups, even if they are very early stage, that those are very different skill sets than when you are going to build. Building, you need to start hiring a new team, do the IP licensing, legal agreements, think of fundraising, think of mentorship. So for that, we were keen on doing it, but we didn't do it ourselves, hands-on, roll up our sleeves. No, we work with the likes of on the back ventures, or in our case, we work with Cambridge Future Tech, because they are experts on having this conversation. We were very engaged. I was at the table on many of the conversations, but having this this expertise by our side will help save time, especially because we were not doing this day in, day out. Another model is when you have a entrepreneur in residence. So someone inside, you create that capability, and that entrepreneur in residence will create, will do all these activities, and ultimately will move out of the corporate and join the startup. That could be another model that, was one of the considerations, and I think could make a lot of sense if there is a very strong drive to do more spinouts.
I know, Rina, you also looked at spinouts in different countries, so in Europe and the US. I'm wondering, could you just comment on if there's any particular differences that you found working with, say, spinouts in the US as opposed to Europe?
Yes, and I think what I could say is, from my experience, I felt that the mindset that I found in the US was a lot more transactional. They were more standard processes, in the sense that they know they are, the university is a machine of creating knowledge, but probably they were, I guess, a bit more aware that there is a long bridge to cross when this knowledge can actually become useful and can actually be named innovation, to drive value, to create new markets, which is what the corporate wants. So despite this is of a high value for the university, it's still far from what is of high value for the corporate. So when we were interacting with in the US, a couple of examples that we have is more, it was a very, very fast, let's claim on and try to make the startup more successful. And one of the ways of doing it is, for example, taking less equity or claiming for less royalties is more, probably they had also more incentives to have more and more spinouts. I guess the more you have, the better chances that one of them will succeed. Because we need to remember this is super early stage, and this bridge, they may never cross it. You may find out in the way that it was not possible to materialize the value that was expected, and that can happen, more often than not. Is that the case?
Emmanuel, if I just come back to you on the technology transfer side, I'm wondering, what kind of challenges do you encounter when you're working with corporates, or is there anything that is a little different that working with corporates as opposed to other VC?
I'm again focusing on the back end of the funnel, on the commercialization, either via licensing or primarily via spinouts. In this case, one of the issues we have is that when we launch new companies, they tend to be very early stage. The teams are not completely formed yet in the completion. So it's difficult for some of the CVCs to join, to invest at that point in time, because they need they're small teams, and they can't necessarily take the venture building effort in a large way. Having said that, a lot of our companies are having institutional investors to lead the due diligence, and they more often than not welcome CVCs to come and join the cap table, even at the seed stage. Certainly at the Series A and Series B stages as well. So that's one of the issues. Otherwise, we have in Oxford, we have developed some methods which are quite straightforward and quite to create new companies, to license new technologies to new companies. We have a published express license on which anybody can see in the internet, which is a pre-negotiated kind of technology license template, which is very favorable for the spinouts. It gives them a break of effectively paying very little for the first few years of the venture, and they only start paying licensing costs after they make a significant amount of revenue, cumulative revenue. At the same time, it has a small front-loaded payment and a significant back-loaded payment which is a success fee, effectively. So we have that, which is any spinout has the right to take, which makes the negotiations of the licensing much easier. More often than not, we are pretty well resourced so that we can get the legal stuff very quickly done. One of the problems we see occasionally is that our academics are brilliant people, but they don't necessarily like paperwork. And there is unfortunately some paperwork to be done, particularly for determining the ownership of IP, because they may have taken money from funders who have ownership stakes on the IP. And all this thing has to be clarified, and has to be clarified in a timely manner. We work with our colleagues at the university to do that as quickly as possible, but sometimes it's challenging, and it takes a bit more time, more than a CVC very keen to make an investment and start going would appreciate. We do try to do things very quickly, and we have had cases when we've managed to go through the whole process in record time. But sometimes patience is required, a little bit.
And Sang-Sik, I just wondered if you could comment on when you are investing in spinouts, do you look to lead a fundraising round, or do you try to build a syndicate? If you could just comment on kind of that process of investing.
Of course, like we prefer syndication because it's an early stage. To have more investor means like you have more comfort for the next round. However, like whether we lead or not is another perspective. Like sometimes the corporate venture capital can like lead better the round because, as others already stated, the spin-off doesn't have that much operational maturity. So sometimes the technology itself has to be validated in the right way, and corporate venture capital can bring those know-how and experience to the game. This is why I think sometimes we have to lead, like to give the companies or spin-off companies the right value and the right target for the application. Yeah.
Mm-hmm. And is it quite challenging to sort of build a syndicate at that very early stage?
Oh, in our case, I think sometimes corporate venture capital is also bringing the brand name. So syndication, once it is validated in the right way, for example, wafer testing in our fab, this kind of give lots of validation to the other investors. So sometimes it goes easy, but it's always challenging, as you know, like to bring other investors. But in certain area, the syndication is already formed among the, like for example, in semiconductor, there's already like syndication easily formed like with a previous investment. So this can be one example.
I wondered if there's a lot of variability among universities, and maybe Kyung, you could speak to this. I mean, would you say it's quite maybe a bit challenging if you're an investor looking at spinouts, the fact that there's a lot of variability among the different universities in terms of deal terms, different approaches to investments?
Yeah, I think that's definitely true. And I think we'll be working with GCV on creating a handbook of sorts, even around the language that's used. I think there've already been a couple of mentions of TRL. Now when I hear TRL, I know exactly what people mean, but I think in retrospect, that took me a year to figure out what the TRL was on the, on the scale of 1 to 9, and what 3 means, and what 4 means, and what 7 means. Even just things like that, licensing, royalties, exclusive, all types of different contract research. I mean, it took me at least a couple of years to be able to even have the discussion, so that, for example, when we initially made contact with Oxford, OUI, we were able to have within an hour, we pretty much knew where everything was, Kim. So I think that definitely does help, having an understanding of how to communicate, at the level that the universities understand. It makes a huge difference, because otherwise it is really like a different language. And I can understand if an investor hasn't had the opportunity to have that experience, or to gather the education, it can be really challenging.
And I'm wondering, do you ask, maybe this is a question for the corporate investors, do you sort of ask for any specific rights in spin-out deals that you wouldn't necessarily do for later stage financings?
I can go on that one, and it probably links also back to the syndicate question a little bit. So I guess it depends. And maybe Emmanuel can help confirm this. I guess if it's a life sciences company, they want all exclusivity. They want to have the unique right over that IP. In other cases, like the example I was giving about, you want a solution for your operation, so that's not core to your business. In our case, we were not even interested in the IP. What we were interested is, okay, let's equip a startup so that this startup gets very successful and they can reach the end point. It's just, let's make this startup as successful as they can. Other investors, other corporates will say, we want to have ownership of this IP. And that also goes back, I said, will link to the question of the syndicates, because a syndicate is to pool either money or experience, and at this very early stage, I guess for a corporate, the amount that you're investing is not meaningful, but the experience that perhaps a syndicate can provide at this stage could be important, or they can bring a lot of value. So also to make it tangible. So for one of the examples, what we did is, okay, we sponsored the research. Once it was ready for a pilot, then there was another corporate that was able to, because they had already some rights or some permissions that they needed to have to do a pilot in situ, that could speed up the process. So that was a very useful syndicate, because they will become investors, because they will allow to run a pilot in an amount of time that will save at least a year in the process. So that is a value of a syndicate. In the other case of the other spinout, that other investor that wanted to come in the syndicate was going to provide the material for the trials that they were doing in the university, and they would become also the provider of the raw material for the reaction that was being developed. So that in that case was also important. So but there was the special right in the case of operational advantages. So we want to have the first right of refusal, and we want to have, if this operates, maybe we want a special tariff, so special price, so that we can actually have a cost advantage. But ultimately, we want the company to be the new startup to be successful.
So could you maybe comment on any kind of special rights that they're specific to spin-out deals that you do that you wouldn't necessarily expect for later stage deals?
Yeah, actually, because of negotiation is much easier. Corporate tends to ask like exclusivity, as Lena told. However, like when you meet like corporate venture capital who has like lots of history, for example, we also were in the first stage really eager to ask for exclusivity, but eventually we found out that exclusivity has both sides, so you can also kill. But sometimes CVC also needs this kind of rational to invest. So I think this is why sometimes venture building kind of stuff is quite important, and because exclusivity has to define in a different way. So even you're asking exclusivity, it doesn't mean it's exclusivity for everything. So you can really define that to a certain application, which is almost not really binding. Like, so all the way how to structure the term is quite important. And this is why you need to meet a good corporate investor or having a good negotiator for the terms, because corporate venture capital usually asks lots of things, but eventually they want to have a success in their investment. So this is why you have to really aware that you can do a lot of negotiation and avoid the critical exclusivity term, but give them enough comfortness with like similar terms. Yeah.
Someone's asking, what is the typical level of funding for an early stage university spin-out? Wondering if someone could. Yeah, Emmanuel.
It varies. I mean, Lina said earlier that every project is a little bit different than the previous one. I mean, the good news with Oxford is that we have many cases to draw, a lot of history to draw on, and a lot of corporate wisdom through the years. The level can vary depending on the nature of the business. One can start with 1 million, 2, 3 million. One can start with 10 or 20 million, depending on what is the business. Deep tech and diagnostics is usually between 2 and 4, 5 million for a seed stage, sometimes 1.5, depending on the capital expenditure needs of the company. So every case is slightly different. But having a professional team who has seen everything around historically, we can match we help the team basically match the capital requirements. We don't want them to raise too much money at an early stage, because obviously it's expensive money. If they can create value points at later stage with a smaller amount of money, then we certainly suggest to go to these inflection points with lower seed or pre-seed investment and raise more money later on at a better valuation.
Right. And you mentioned the technology readiness levels that CVCs want to invest at tends to be a bit higher levels. So yeah. In terms of the real early levels, is there any particular level of financing that these spinouts are looking for?
I mean, Sung-Sik said something very important earlier. Even the most early stage technology that comes out of the university usually has been built on many years and many millions of the respective currency of investment from the public purse, basically giving money to create the blue sky idea, to start with and have generations of students developing prototypes, lab space prototypes. So even TRL 3 or 4, which is a lab-based prototype, in our case, has already a significant amount of investment behind it. Right now, CVCs would rather have a TRL 4 or 5, and anybody who needs to, everybody in this game needs to learn to understand what TRL level means. So I urge you to have a look at them, at the definitions. But sometimes even TRL 3 are very de-risk and highly de-risked technologies, and the difficulty becomes in scale up, in taking the lab-based technology to bring it up to a larger industrial scale. That there is risk there as well, but with a good team and good engineering, that is usually a path that you can build on.
Yeah, I wonder if you could comment on the TRL levels. So these are technology readiness levels, and there's different levels, right? So When you are looking to invest and maybe kind of build a syndicate for investment, what levels do you kind of look at, and what do you kind of recommend corporates getting involved in?
Yeah, particularly, remarkably consistent actually. And we, as you know, Kim, we operate in, obviously in Australia, my home country, in the Netherlands, obviously in the UK, and also in the US with universities and national labs. Remarkably consistent. We focus on that TRL 2 to 3, which is, for most people very early. Most investors would consider that too early, but I think the point of difference and something that we really focus on is that key inflection point. When you go from TRL 3 to 4, you're essentially taking a breakthrough lab experiment within perfect conditions that's worked and has probably never been seen before, regardless of the actual type of deep tech it is. And now we're going to TRL 4, which means that we're taking that lab experiment and to see if we can replicate that in a small fashion. So it could be a prototype, a small pilot plant, a pre-pilot plant. That inflection point between 3 and 4, we think that dollar number usually sits around 500,000, and it depends on the denomination. So it could be USD or maybe 300 quid or something, 300,000 pounds. Something in that space will generally have enough just to get it from that first sign to 3 to 4. But I would also add, and I think everyone on the panel would recognize, is that what the missing, the bit which really makes this work is the non-dilutive funding available from government. So in UK, it's UKRI, UKRI. In the US, it's SBIR. In Australia, we've got other AEA and other things. I think part of the art is that, as an early stage investor, so as we're a pre-seed specialist investor working with researchers in the labs, is that we need to understand the structuring for investors to make it so that it's worth rolling the dice, right? And then also being able to understand the leverage points. So we normally think of every dollar that we invest or we raise, we expect about 2 times that in non-dilutive funding. So that $500,000 gets close to between 1 to 1.5 actually, which is the whole intention, because we're dealing with technologies that are generally sovereign capability stuff. So in defense, in photonics, in quantum, in neuromorphic, we should discuss before on previous sessions. Those things are very important, and especially with the current geopolitical environment, even more focus on those things. So we can only imagine that as governments start figuring out, okay, we need to start thinking about how we're going to do this domestically. I'm almost certain that they're going to start looking at the universities for more of this type of technology and the translation of that out of the lab, because they can't be as dependent on overseas allies or otherwise going forward. So I know that's something that we haven't discussed in terms of the macro, but I think that's really focused our attention at OTB on this very topic.
Someone's asking, Emmanuel, are there any kind of tangible examples of collaborations or investments that corporate VCs have done with the university? Do you outline some concrete examples?
Yes, of course. And I say more recent examples have to do with Series A investments. And for example, Samsung had one of those cases that Sung Sik can tell you more than I can about that. And this is it, because we're working with some of the leading CVCs in Europe to create more touch points and put pressure, as it were, on the more capable CVCs to have some part of their funds to target seed level capital. I haven't got many examples with seed level investment at the moment, but we're cultivating that. That's an active push, and I think it will be a good work in progress in a way, together with other large universities in the UK and elsewhere, to convince the CVCs to do more seed level TRL 4, TRL 3 or 4, most likely 4 cases. So I don't know, Suksik could tell us about the relatively early stage, but Series A stage of investment that they've done recently with one of our spinouts. the things that doesn't come through my team, it comes through the investment management team, and usually the lead negotiators there are the original institutional investors. In many cases in Oxford, it's Oxford Science Enterprises, which are local VC with a special relationship with Oxford. But there's others as well that can lead. Quite a few, about half of the Oxford spinouts are led by a third-party institutional investor. More often than not, from the States and from the UK. So some things. Do you want to add some details about that particular case that you've done recently?
I'm not sure whether like I can name them, but like, so there are a lot of good examples. So for Oxford, like we invested in a software company and we finally integrated that to our mobile device to enhancing the AI function. So that's one of the few cases that the venture could enter the big ecosystem of mobile software, especially AI, which is driven by mostly the big players. And there are also good cases for material or equipment manufacturers that we engage from the start, like from the spin-off, like right after the spin-off. And then we also acquired, but also we implemented that to our mass production, high volume manufacturing process, which became a huge success for the company as well. So for our semiconductor factory, for example. So this kind of lot of success cases, along with also biosector, which is recently acquired after the seed investment. After 2 years, it was acquired in more than $1 billion, which is not my sector. So I really don't know, but it was a spin-off company from Porsche Institution. So from Switzerland, so which become quite famous recently. So there are lots of good examples, I think, and heavily involving from the corporate sector sometimes give lots of value because even you have only 2 or 3 people, there's also one example that I'm currently monitoring, that one of the big company, US semiconductor company invested when there were only 2 persons. They invested 10 million, they lead the round, so they collected 20 million in total, and then they're bringing them to the market within 2 or 3 years. So they are quite pushing them. They're helping out for everything. So the company is really packed. So this kind of example can be done because when corporate opens the door for the new technology, they get lots of support and help. Of course, you have to be aware that not to get too much exclusivity for them. But because sometimes the commercialization cannot happen without the help of the big corporates, and somebody has to sacrifice that. So the corporate also has to invest a lot of money and resources for the collaboration. So this is, I think, something that we would like to increase the cases. But
Hey,
yeah.
hey, Susik, just a question without notice. I'm sorry, Kim. I've got a burning question for you, Susik. So, as we generate a lot of startups out of universities, at spin-out stage, just as they come out, and you just mentioned that, there's been a few instances, 1 or more instances, when you come in really early. Can I just ask a general question? Because it's been in my mind for a long time. When you come in and assess a startup, are you looking at the technology, or are you really looking at the people, or a combination of both? Like, what's the assessment going through the mind? Because I think a lot of people would think CVCs are just purely focused on the technology. But I'd love to hear from your point of view, and maybe for Lena as well, how you guys look at that, and try to pick, okay, I'm going to work with these people and this startup, even though there's 2 people or 3 people there? What makes you start to go, okay, we're going to actually focus on this and work it up the the chain in terms of the corporate?
Yeah, honestly, it is more on the technology side.
That's
Because,
really
yeah, because it's a long journey, so people is important to overcome all the challenges that is not related to technology. But from corporate venture capital perspective, if the technology is not attractive enough, and if we cannot evaluate in the right way, it's really hard to make a decision for investment. So this is why, like, we usually do lots of tests. It takes 6 months, sometimes 1 year. We test it in a coupon level wafer or in a blank wafer, even in pattern wafer if needed. However, after this validation, there are lots of comfortness to accommodate lots of other investors to the game. Yeah.
Yeah, I agree. At this early stage, what you are looking for is the technology, is the knowledge. So is that. And actually, very often you need to change and find more people and hire more people. So normally you could continue working with the university, with the researchers, because you need the skills, but they may not have the skills to be entrepreneurs or to be part of a company. So that you need to then recruit for the next. So the 0 to 1 was with some people, but the 1 to 100 with other profile. So you need to then hire, because yes, people are very important. But this paradigm of what is more important, if people or the technology, I think also comes a lot from when CVC was more about software, and in that case, you can change software more easily. But when you're investing in the technology that was developed after years of research in a university, you're looking more into the technology and the hard part.
I wanted to ask about equity, right? Because it comes up a lot in discussions about investing in university spinouts. And I was wondering, Emmanuel, if I could just begin with you. What's your approach? What's the university's approach to taking equity in university spinouts?
Well, in Oxford, we have been in a downward trajectory for the last 5-6 years, and we're changing, lowering the equity that we were taking. The current status of the university talk about a 20% equity for the university for projects that if one of the founders is a university employee. It's pretty straightforward. There are some new rules emerging which have to do with software spinouts, which are going to work on not in medical devices or fintech, but in the general software spinouts, which will be looking at having a lower equity requirement, about 10%. And that has been published. I mean, it has been a proposal that our vice chancellor, together with many important people from the UK, have put together in a Use It USIT guide recently. That is being implemented now in Oxford, and OUI already has the ability to negotiate a 10% for software spinouts, but with some specific caveats which need to be taken into account. I mean, the important thing to remember is that this percentage is fully dilutable. There's no special. It's the ordinary shares, and the university is being diluted very quickly from the first round of funding and onwards round of fundings as well. So ultimately, in the end of it, it becomes very similar to, in most cases, in deep tech and life science as well, that it becomes very similar to some of the US universities' 5% golden share with the non-dilutive rules up to Series A. So it becomes very similar to that, but it sounds worse because it's 20% ordinary shares.
Mm-hmm. And just on that 20%, is there any rationale behind that kind of percentage number?
Yes, I mean the rationale is simply that the technology that the spinout is built on has been built with many years and huge investment from the public purse. And the university sees fit that some of the success of a spin-out should flow back down to this to the charity, which is the university, to fund further research, further innovation, and teaching as well. That is the main rationale. There is pressure, obviously, for this to going down all over, but I think it's an investment from the spin-out, which comes back to the roots of where all the sources of where all this innovation is coming out from, which is the research labs of the university and the teaching of postgraduate students.
John, you invest in spinouts as well as put a kind of team together, and you're involved on the kind of venture building side. I mean, what kind of equity, your approach to equity in investing at very kind of early stages?
Yeah, I mean, there's a range. I mean, again, it's globally, 20% is not unusual. It can be as low as 10 and sometimes higher than 20. I think that there's a perception that maybe some things to discuss here and just to clarify. There's a perception that when there's an IP transfer, so in terms of the licensing agreement with the university, and let's say it's 20% in the case of, say, Oxford. Now, that's just not for the IP transfer. And yes, Emmanuel's right. There's lots of millions of dollars and often 10 years worth of blood, sweat, and tears in the labs. It's very, very hard work, to get to a point that there's a potential inflection point, go from TRL 3 to 4. And that's all on the university doing that, out of their own prerogative, making that investment into that particular research and research lab. But what we view it, and this is a really key point, what I mentioned before is we view universities as partners. So when we're negotiating terms with the universities, in this case, Oxford's 20%, what can the university do to help the startup moving forward? One very often forgotten point is that when you're a startup, who actually cares about your startup? I mean, who really cares? Who actually wants to help? And often the answer is not many, because it's too early, it's just an idea, there's a few people around it. So you have this, as a university startup, you have this opportunity to have effectively $1 billion historical corporate to be on your cap table. Interesting point. So when we start investigating, and in the case of, sorry to keep coming back to you, Emmanuel, at Oxford, because you're on the panel, and we've had some really great experiences to date. When you start looking underneath the cover, you can see the policy is that the tech transfer offers, OUI, get 10% and OSC gets 10%. When you look at Oxford Science Enterprises, they're an amazing network of people that can help with talent, can find co-investors, can help with other corporates. So it's not just the transfer of IP. Founder shares and equity is who's going to work on the startup going forward. It's time moving forward. So that's one really important point that I'd love to continue to socialize and educate everyone I can speak to, and we'll continue to do that in partnership with GCV. But the other point I'd like to make is that if there's talent that's coming down the hill that wants to be part of the startup, either in management, the CEO, and if the university's researchers and us and other investors recognize that talent and think that that talent could help us move forward, we have no issues, and I know universities have no issues to all of us diluting to accommodate that talent so that they can take it forward. So the point here is that in our experience, the universities have not been in a position where they're trying to hold on to equity for dear life. In fact, it's kind of like, well, this is it's in recognition of what we've done historically, but what we can do to help in the future, and that's the discussion. So once you're in that mode, then all things are possible. And I could go on for a really long time about how helpful universities have been, around the world with the startups that we've been working on. We've got 15 to 20 around the world already at this pre-seed stage, So I think we do see some trend lines in that data as well to point to that fact.
I want to, just before we end, because we are kind of coming to the end here, but I just wanted to give the corporate investors some feedback on the equity question. As a corporate investor, do you have any expectations for how much equity you take as opposed to the university? Sung-Sig, maybe you could comment there.
Yeah, I think it's a little bit different, but we are foreign investor, foreign CVC, which would like to have the university as a brand and also give some impression that they will keep supporting the company. So we prefer them to have at least 2-digit, like staying as a major shareholder, because sometimes what we fear for early stage is if the financial VCs are playing too much around on some management, like because they can fire easily the management, and like we want to have someone who can, how to say, control it, who is in the like neutral position, because sometimes foreign investor cannot really involve heavily in the day-to-day course. So we like to have somebody as a major shareholder who can see what's going on in the neutral way, rather than like jumping around, firing the management and hiring new management, you know, that can be really dangerous in our view. So that's why we prefer. But like one thing that we would like to ask the universities and the R&D centers are like more like sharing more facilities to the spin-off company, even after it become like a different company, you know. That's why like as a major shareholder, it's more easy to ask this kind of favor, because university and R&D center has lots of facility, test facility, for example, big synchrotron, like big AFM, which is like $5-10 million was. So this kind of test facility is quite critical in my view. And it takes a lot of money if you want to buy it on your own. So actually this kind of stuff is why we would like to have the university and R&D center at least 2-digit and like stay as a major shareholder.
Lena, do you have a view on as a corporate investor, how much you kind of expect in the university to take in terms of equity?
No, I guess the numbers that have been quoted are anything from 5 to 20. I guess which is in a sense is right. What also happens, and this is evidence, is the conversation shows that, you know, the university is looking to the past, how much have they invested, whereas the corporate is looking at what is going to be the revenue potential, which are two very different equations. But yeah, it's the amount of money that you have invested to get to the point where you can actually go, for example, to a Series A. Sometimes, and that was the way we structure one of the companies, could be higher than the valuation that the company is going to have at that point. So which means you need to invest more into the research. It's not that every month, every penny you put here, then it translates into the point when you actually will call others to invest. Because a lot of this is a failure. But you normally you cannot just charge for that, you know. But it's the upside that we'll have from here that determines the value, not how much trial and error happened before. The interesting point.
Well, thank you. Thank you. So we were running out of time, actually a bit over. So thank you to the panelists for this very interesting and detailed discussion on best practices for investing in spinouts. We'd love to have feedback on our webinars. And if you have any questions from this panel discussion, please get in touch. My email's here on the contact us page. Thanks again to the panelists, and yeah, thank you for a great discussion.
Thank you.
Thank you.
Thanks.